Hey guys, Steve here from theturtlefollower.com with the strategy session for Wednesday, September 24th. So I hope you guys watched the stock market outlook video I put out Monday morning. If not, I'd highly recommend you get over there and take a look at that. Basically, we pretty much outlined what we thought was gonna happen. We called pretty much 2 down days in the beginning of the week, followed by a bounce off of that support area, being the 50-day moving average on the S&P futures. And that's pretty much exactly what's happened the past 3 days. All right, yesterday and the day before, being Monday, we're down about 100 points each. Today we recouped most of yesterday's losses and a little bit of Monday's losses. And right now, we're pretty much defining that 1970 level as some significant support in here. Okay, so you can see here the 50-day moving average came right off of that level. So I think, again, it looks like that we maybe want to consolidate in this range. All right, maybe this is building up similar to what we're talking about in some of our stocks, where we're going to move sideways into this trend line and then eventually break out over that 2000 level. And this type of action is good. All right, we had this nice bounce off of this trend line support back here in the beginning of August, and now instead of pulling back, even though the last 2 days didn't feel that way, instead of pulling back, if we can potentially go sideways and then break out again over 2005, then that sets us up for a great rally into the end of the year. And I know we talked about that a couple times in the past stock market outlooks, but if that's what we can get here with this sideways action and then a breakout, then I think all systems go. The NQs, similar, up 50 points today, right off of that trend line. Again, potentially putting in a sideways consolidation where we would be looking for a breakout over, say, 4100. And the last one, the Dow. Again, this was the stronger of the three, but this one did break out, pulled back, and now looks like with this 170 point gain today, that maybe what's happening with this is instead of actually consolidating, maybe we're actually moving along a trend line. So let's see how these play out. But I think, again, some more consolidation on the S&P can lead to some significant higher prices towards the end of the year. Now, we did exit 2 stocks today. We'll go over those real quick. AMT was the first one. We exited on the breakdown below 94. That happened yesterday. We had some support here at 93.50, but it looks like as the day wore on, considering how much the market was up, the fact that this was only up fractionally after pulling back so much, just kind of tells me not a lot of people were looking to buy it. So I would look to see if we get lower prices in this, potentially along this downtrend line from the highs on the September 8th. But for right now, you can see what's going on. So with AMT, though, one of the reasons that we did exit the trade was basically that we broke the trend line, the 50-day, and this previous support here. So that was one reason we decided to step aside. We're now trading below the 50-day moving average, which hasn't happened since the beginning of April. So I just felt it was a good time to step aside. The other trade we exited was H&R Block, HRB, and again, this was a similar setup where we were moving higher. We looked like we were breaking out, and then earnings came out and some significant selling pressure took place. We consolidated a little bit at the bottom of the box, and instead of moving higher, we are actually breaking down through those levels. So again, like I said yesterday, if it was something that you wanted to place a short position on, you would be able to actually buy or sell at today's open and put your buy stop here over 32.50. For right now, though, I think the market is heading higher, so I'd rather make dollars instead of trying to pick up pennies in front of a steamroller type of thing. So for me to take the short position, yes, it may very well work. It may prove to be a good trade, but you're kind of fighting the trend of the overall market. So for me, it doesn't really lend itself to that type of setup. So with those 2 exits, we are remaining with 8 positions. and we'll go through those real quick. Apple continues to consolidate. Looks like that this box between 103 and 98 is defining the range right now. So we are still above the trend line. We're still above that 50-day moving average. So, I would not be surprised to see Apple come back down to say 98 and then eventually back up to 103, maybe test each side a little bit. But you could see here on the weekly chart, we are moving higher and we are doing so very nicely. But in the last, let's say 1, 2, 3, 4, 5, 6 weeks, we have pretty much been in sideways consolidation. So for right now, $98 is our stop level. I would like to get that breakout over 103 to really define and confirm that stop is in place. But I do feel that if we broke down below 98, the trend would be changing, and that would be a cause or enough reason to exit that trade. ADM up 1.36%. You can see here it's coming back into that trend line, bounced after 3 down days. So this is a nice reversal here that we've had today. We're still using 49.08 as our stop. We could potentially or eventually move our next stop level to 50.17 unless we can get some more significant price references using today's low of 50.73. But 50.17 or say $50 would be the highs from this small consolidation right in here, and also the low from this small pullback. So $50 could potentially be the next stop level in ADM. Disney, right off the 50-day moving average, came right back into support. Yes, it did close below the trend line yesterday, but sure enough today took that right back. Almost a bearish or a bullish engulfing pattern, but we needed to open lower. Didn't look like we did that. But again, this one, coming right back in to that support area. I'm still waiting for that breakout over 91. I would be very surprised if Disney didn't test $100 by the end of the year. That's just my personal opinion, but just the way it's setting up, the way it has moved in the past after these breakouts, if we can get that breakout over, say, 91, it's a little hop, skip, and a jump to $100. Expedia, nice move today. All right, we talked about this. This was a very similar setup to what happened in the S&P futures. All right, we were moving higher. We came back in this well-defined downtrend channel, and sure enough, right off support. So we know our stop is in a good position at 82.67. Next level would potentially be right here at say 83.50. But what happened was we broke this downtrend line with volume today. So we could see here on the weekly chart also coming into the trend line support and bounced off of and higher. So, if we can get to the point where we can put in another solid day above this downtrend line, then I think we may be moving back to the highs of say $88, $89. But for right now, $82.67 is a good stop reference. Fidelity, again, came back down, tested the 50-day, consolidated right around the 50-day. Okay, small consolidation, and now moved higher out of that. So next potential stop level, although minimal, is going to be, we're going to say right in here at 56.89. And what we need to wait for that to happen is, first of all, the 50-day moving average to move above that level. And the second thing I would really like to see is a breakout and a move over 58.50 to pretty much define that this was another low. Right now, 56.41 is our stop. So we're only talking about moving at 40 cents. But like I said, I think that's a good little reference that we could potentially use down the line for a stop level. GD up 0.8%. Okay, again, 3 down days, a bounce off the 20-day. This one wasn't as convincing as the others, okay? The other ones took over pretty much all of yesterday's move. Today pretty much only went to the center of yesterday's bar in GD. So with that said, what are we looking for? Right now, we're just managing risk. All right, so 121.30 is our stop. next stop level that I'm going to be using is going to be right here around 122.50. And of course, you guys know, if you followed me before, we are waiting for that 50-day moving average to take over that level. And you can see on the weekly chart, nice, well-defined uptrend. All right, so there's no reason that I see at this point that this trend may be coming to an end. Okay, could this potentially be the top? Absolutely. But until we have confirmation with price breakdown, we'll continue to stay long GD. LUV up 3%. All right, so you can see similar to, or the opposite side of GD, where we only came and bounced and took over half of the bar from yesterday. LUV, on the other hand, came back down to the 20-day moving average, bounced, but moved above yesterday's open. Okay, so you can see we're pretty much now into Monday's bar. That to me is a sign of a much stronger stock. So out of the two, I would say LUV is the stronger of the two, just based on today's action. But again, right into the 50-day moving, or I'm sorry, the 20-day moving average. Where next stop level looks like it's going to be this 31.78. Again, we are just waiting for the 50-day moving average to close that gap and start trading above 31.78 to move that stop. Right now, our stop is 29.39, using the highs from this, I guess, move back in here at the end of July. RSG, again, just continues to move sideways. This is getting to be a nice looking setup here. All right, similar to Disney, I think if we can just continue to move sideways another week or two, eventually break out over this 39.61 area, you could see how that's setting up nicely. The 50-day moving average trading down here, 38.61. You can see that right on the side. So again, another breakout, potentially move a stop higher. Once that 50-day moving average trading over 38.95, that's what I'm looking for in RSG. In the meantime, you're getting paid a 2.85% dividend. So, you know what? If it moves sideways for another 2 weeks, it's just more money that's going to be in your pocket. All right, as far as our watch list stocks go, we had a significant portion of the watch list in the green today. So, again, if you weren't following along yesterday, I did something with the software. I lost all of my drawings from over the weekend, so just bear with me. But essentially what's happening here with JWN, as you can see, we're consolidating. We bounced off of the trend line. You can see again on the weekly chart coming right over into support of this would be the dashed line on the weekly is the 10-week, which correlates to the 50, and the 100-day moving average is the solid line, 20-week, which is the 100-day. So the reason I have those trend lines on here, moving averages on here, is really what we're using for our scan is once the 10-week moving average is trading over the 20-week moving average, we're considering it to be in an uptrend, and that's what's happening, and that's what has been happening. So now we're consolidating, moving into those support areas. JWN, you're still waiting for that breakout over $70.50. HOT is consolidating right here. So HOT, you're still waiting for 84.50 to be the breakout signal, but a nice bounce off the 50-day moving average. APC, this was one we had on the watch list. It looks like now it's starting to fail. You can see how it broke down. Now with today's action, stopped right at the support of the previous consolidation. So for this one, that's a no trade. You know, whether it moves higher or not for right now, I'm not sure. HD, talked about this. I'd love to see this one continue to move sideways for another, say, month, and allow that 50-day moving average to catch up, build a nice base in here between 93.50, 88.75, and then eventually break out over 93.50. You could see here on the weekly chart the length of time that it was in this consolidation. All right, so this is, think of it like a coiled spring here. This thing wants to break out, and it did break out, and now it's giving us another opportunity to enter. So I would, right now, I want to just enter on a breakout over 93.50, and hopefully when that happens, that the 50-day moving average will be over this 88.75. If not, we may have to adjust that stop down a little bit to say this stop or this gap level here at 86.86. ABC coming into a nice bounce off the 50 and potentially looking for a move over 78.30. You can see here this is a nice looking setup, similar to something I tweeted out yesterday in EMC, which we'll go over real quick at the end. But you could see it broke the trend line by time. Now we're still sitting above that 50-day moving average, and we're still looking for that breakout over 78.50. But you could see a nice well-defined trade there. Kroger, again, another nice uptrend in place. And what's happening here is we're consolidating today's action. Not so much of a breakout as I would want to see. If you do get this breakout, I would consider putting your stop down here at, say, $50 as opposed to the 51.50. Just give it a little bit of room. And if you want to give it even more room, and you have the room, in the position, because we're not going to be exceeding that 8% stop level or 10% stop level, you could even go all the way down here to 48.70. But until that breaks out with more significant movement, I would say that's a no trade right now. WDC, similar to APC, broke down and is now trading below the consolidation, so we'll wait on that. Alcoa, this was one that I was long. Personally, I exited the trade on a breakdown under $16, but you could see what's happening here. If we take this out of the screen, you could see exactly what's happening. All right, potentially we could be bouncing off this 1560 level, and if that's the case, we're setting up another trade above 1726. Look at the weekly trend in Alcoa, how strong it's been. A nice little break here and an eventual breakout over 1726 would probably be good for the stock to sit here for another month or two and really build up some steam for that breakout. LEG up 0.17 or 1.17. Again, I was looking at a trade and a breakout over, say, 35.50, but you could see here where the 50-day moving average is. So if you were to take that trade, the stop may be a little too tight, and if you were to put it down here at 32.60, then it may be a little too loose. So kind of an in-between on that one. WMB, again, consolidating. You can see here, again, it bounced off the support of this gap. Okay, the gap from, let's see, 613 to 614. So bouncing off of that gap. And so now we're still waiting for that breakout over, say, $60. Intel, this one's shaping up nicely. All right, this one's a nice tight setup here. Could wait for that breakout over, say, 35.20. If you get that breakout, I would consider putting your stop. Even though this is above the 50, I think that's way too tight of a stop. I would consider putting your stop down here at 32.59. Again, probably just about 8 to 10% on the stop level there. Estee Lauder is really just in sideways consolidation. TEL, you can see that broke down from our consolidation. All right, so that one's a no trade. NASDAQ group, this one bounced right off the 50-day moving average. Here's your new box, so you're waiting for a breakout over 44 and then potentially using today's low as your stop level. HPQ, not liking the looks of this. This is a lower high here. Okay, this is your lower high, signaling a potential reversal in trend. You can see it did break the trend line here. If I can get the right tool, I will show you. There we go. So there was your trend line. We broke the trend line. Okay, we broke the 50-day moving average. We put in a lower high. The 20-day moving average is curling down. I would say I would be out of this trade in HPQ. But if you look at it on the weekly chart, you are coming right into support of the 100-day moving average. TXN just moving sideways. No trade on that one. Merck up a little bit. And Win. You can see Win's nice tight consolidation coming right into that 50-day moving average. So gotta see what Win wants to do. You can even draw it as a downtrend line. All right, so there's your setup for Win. whether it's over the downtrend line. I'm a little bit more conservative, so I'd probably wait for a breakout over 1160. The other setup that I really like moving forward is EMC. I tweeted this out yesterday. You could see, again, similar to, I think it was ABC. Let's see how good I am. Yep, ABC. So similar to ABC, we're moving sideways right into the 50-day moving average. Trend line is higher. Okay, there's your trend line coming up. So for right now, EMC, you get a breakout over 30. You're going to set your stop most likely right here at 29. So it is a tight stop, about 5-6%, and see where we go. But we got to watch these earnings plays coming up now, guys. Earnings are coming out, going to be coming out soon. So we want to obviously make sure that we're not taking any trades that are within a 2-week period prior to earnings. So that's it for tonight, guys. I hope you enjoyed this one. I hope it kind of shows you how having a plan really does help, especially when it looks like everything is collapsing around you, to know where your entry and exit points are. So if the video was helpful, I ask that you please share the video, social media, Twitter, StockTwits, Google+, YouTube. Definitely leave a comment, hit that like button, and we'll see you on Monday for a new video. All right, have a great night, guys. Take care.